what's up guys? Long time no see. So, you can be forgiven for thinking this channel was dead. I know I haven't posted in a while, and I'm not even gonna make up an excuse for it this time. So basically, I just post whenever I want, and if you don't like that, take it up with my non-existent complaints department. Okay, so a few housekeeping things before we jump into today's video. You'll notice that we have a new logo and a new intro. So as kind of a cleaner, fresher look, and I hope you guys like it. And also in the meantime, while I was away, I also started a podcast with some friends. So there's a couple of episodes out already, and I wanted to get some things out on that channel before I show you guys and point you guys to it, so that you guys could potentially binge watch whatever I have there, and there's something for you to grab onto and get a sense of what it's like. So it is called the Zillennial Money Podcast, because you get it, because we're millennials, but some of us are Gen Z. We're right on the border, I think, right? I was born in 1995. Yeah, basically it's a bunch of Zillennials, me and my friends, and we talk about finance, we talk about news, we talk about politics, we talk about some more controversial topics than what we typically talk about here on Andy's Fire Club.
Assuming that you could vote in the American election, who would you vote for?
No comment.
For the decrepit or the decrepit, you know?
Would you vote for a forest fire or would you vote for a dynamite explosion?
For Mr. Beast.
Honestly, I think like this is the state of American politics where I think if you just plucked a random YouTuber from YouTube and made him president, it'd be better.
So I think I'm rolling the dice a little on potentially getting canceled by making this Zillennial Money podcast and talking about controversial topics. But if you want a more unfiltered version of me and you like hour-long unhinged rants, that would be a perfect show for you. So I've left the links down below to the show. There is a full channel where we post the full episodes, and there's also a clips channel where we post clips and shorts, and it's more bite-sized pieces. So links for both of those are down below in the description. Anyways, that's it for the intro. On to the reason why you guys are actually here. And of course, it is PayPal, PayPal, PayPal. I know this is painful, okay? So I'm not going to sugarcoat it. This stock has been a pain in the backyard to hold for the longest time. And yeah, one of the major reasons why it's been a pain is because it crashes after every earnings report, despite the earnings report not being that bad, okay? So let's take a look. What happened, right? Today was no exception. People are saying that it's a bad earnings report. It's not. Let's look at the report. Believe it or not, I think it's actually a good report. And I know you are going to say that I'm biased because I'm a PayPal shareholder, but just literally take a look for yourself. So net revenue is up, net income is up, and yes, transactional margin or transactional cost, and general admin expense is also up, but that's factored into the net income. So that didn't stop the net income from going up quite dramatically, actually, on a year-over-year basis, that is. So, you know, just looking at the income statement, I don't see anything wrong with it. In fact, I'm actually very impressed by the income statement because, again, they beat expectations. So I think expectations for net revenue was only, they were only supposed to go up by 6%, but they came in with a 9% increase in net revenues. So yeah, that part is actually fairly impressive. But okay, if it's not the income statement, is it the balance sheet? Well, let's take a look at the balance sheet. So one thing I want to note about balance sheets of companies like PayPal, a lot of you might not know this unless you have accounting experience. For a company like PayPal who hold customer funds as a custodian, they have to record the company funds that they're holding for customers as a liability. So technically it's like you owe the customer this money, but it's very different than debt, right? Which is also recorded as a liability. So it's like you holding $100 for your mom. It's not the same as owing $100 on your credit card. But some people don't know that, and they might look at the balance sheet and go, oh, why is there so much like liabilities on the balance sheet, right? So it's not like that. You should kind of back out the customer deposits and the amount owed to customers to get kind of a true sense of what the balance sheet looks like. But yeah, anyways, maybe what's more interesting is the cash and short-term investments, and you can see that PayPal has about $9 billion in cash and around $5 billion in short-term investments. So that's around $14 billion of liquid assets they could access in a short amount of time. Which both of those are up dramatically year over year. In terms of long-term debt, it has actually gone down year over year. So it's a smaller amount than PayPal's short-term assets just by itself. So no concerns from me for the balance sheet. That's the point that I'm trying to make. Okay, if it's not the income statement, if it's not the balance sheet, then what is scaring off investors, right? It must be the key performance metrics. It must be something that PayPal's doing wrong in terms of their metrics that's causing investors to panic. Well, why don't we take a look at those right now? They came in with transactional margin growth of around 0% year over year. So it's actually a little bit more than zero because it's slightly positive because Q4 2022, if you look at the chart on the top right, it was 3671 million, so 3.671 billion. And then they came in with 3672. So they beat by 1 million. Or I shouldn't say they beat, they went up by 1 million. But $1 million for PayPal, it's a negligible amount, right? So I'm fine with just calling it zero. And I know that doesn't sound very impressive that they came in with a 0% growth on their transactional margin. But one of the big bear arguments against PayPal was that they were suffering from a decline in transactional margin. And we saw them completely reverse this trend this quarter. So yes, zero doesn't sound very impressive, but considering it was negative year over year for the previous quarter, and then they reverse that trend, I think that's pretty impressive. So looking at other metrics, I mentioned earlier that revenue growth beat expectations, 9% year over year. Expectations were as low as 6%. Non-GAAP operating margin and income actually were both up as well. So again, you can accuse me of being biased because once again, I am a shareholder. However, I really don't see where the red flag is, right? I don't see anything super bad about this report. Are there things that they could be doing better? Of course. Yeah, it's not going to be like A plus, smash it out of the park for every single metric. But overall, I grade this report an A, right? I think it's great. It's not an A plus, it's not an A plus plus, but yeah, I think it's all right. It's more than all right. It's actually good. Despite all of this, though, your big question right now is probably why is the stock down? You're telling me all this good stuff about PayPal, but the stock is down 8%, okay? Well, a lot of people are saying that they didn't like the conference call. That is the reason. And I actually listened to the conference call, and here's what I have to say, okay? So it was a little boring. I'll have to admit that. But once again, I didn't hear anything that was concerning. The new CEO, Alex Chris, I think he was just trying to play it safe, especially after the comment that he made about shocking the world. We'll talk about that a little bit more just in a few minutes. But basically, Alex Chris, I think he was trying to play it safe. And he was just trying to play this as solidly as he can. And he's just like, yeah, we're going to drive profitable growth and we're going to try and turn this ship around. Perhaps he didn't sound as enthusiastic as he could have been because, a few weeks ago, he did make that comment where he said he was going to shock the world. And I think that put expectations in the wrong place. Investor expectations went way up. And then in the end, I think they showed off some merchant videos, some features that were tailored to merchants. Basically the market wasn't impressed and the stock kind of pulled back by a lot. So I think tonight, Chris is pulling back a bit and not trying to make these huge statements to kind of shock the world again, because that kind of gained some bad reputation. And, it wasn't a good look for him and it wasn't a good look for the company. He didn't want to make expectations go crazy, or at least that's my theory as to what exactly happened. So I think it's a combination of factors that led to the stock falling dramatically after hours. We also have to keep in mind that PayPal is a heavily retail concentrated stock at this point, right? So every time I make a PayPal video, it gets way more views than any other stock videos. So this just goes to show that there's a lot of retail investors in this stock, and there's nothing wrong with that. But I'm just saying that I think a lot of the big money, the institutional smart money people, they realize that, and they have all types of tricks up their sleeves to try and scare retail investors. So you guys watching this video are probably not going to fall for those tricks and probably aren't going to panic, because I just told you guys, I'm like, hey guys, this earnings report actually wasn't that bad, right? So I know you guys are not going to panic, but for every person watching this video, there's probably going to be like 5 more other people that are in PayPal that are not going to watch this video, that are going to panic, right? And it's just a knee-jerk reaction, and they're just going to be like, oh, the stock is down, it must be a terrible earnings report, I'm out. All right, so unfortunately there are going to be a lot of people like that, and a lot of people will get shaken out of this stock. And you guys know what I'm going to say to that already, right? Just to make it clear, my thesis surrounding PayPal has not changed. So the company is, in my opinion, moving in the right direction, despite the stock not moving in the right direction. I'm definitely still going to hold on to my PayPal shares. And the next question is, would I buy more? And the answer is yes, I would. However, I'm, as always, a bit low on cash because there are a few other opportunities that I'm looking at. But yeah, I would be open to adding more PayPal shares for sure. And by the way, if you want to get more insights as to what other opportunities I'm talking about, that's why you should watch my podcast where I talk about a lot of things in more detail. But yeah, anyways, back to PayPal. I'm really not seeing any reason to panic, and I'm really not concerned about this dip at all. But I'm curious as to see what you guys' opinions are, and if you have thoughts and concerns or comments around PayPal, be sure to leave them down in the comments below, and I'll try to respond to them, and I'll for sure read them. I probably won't be able to respond to every single one, but I'll be sure to check it out. So yeah, leave your comments down below and let me know what you think about PayPal. And yeah, that's it for today. I'll leave the video here. Be sure to check out my podcast, Zillennial Money. Be sure to follow and subscribe this channel, Andy's Fire Club. And be sure to give this video a like if you enjoy the insight. And I'll see you guys in the next video. Bye-bye.